Hello kind people of YouTube and welcome back to another video. After a very tumultuous day yesterday, we are going a bit back into normalcy today. So let's take a look at the markets and then at a few news articles that you can already see open up here. As always, all the links to these will be in the description to the video, as well as ways to support the channel and my social media links to the Twitter and Facebook page. And if you want more videos like this, make sure to subscribe. But now let's take a look at the markets and let's start by refreshing CoinMarketCap here. And we see not that much movement from yesterday, pretty much a mix of green and red, with most coins up or down between 1 and 5%. Now, this is looking relatively red if you just take a quick glance at it, but if you look at the 7-day graphs, you will see that everything that has lost some value has only lost some value because we're looking at exactly 24 hours ago. That was when the markets hit a peak of $230 billion market cap. Now, of course, we are seeing the prices consolidate at slightly lower values, which is pretty much to be anticipated. So all the major coins, some of them are down since 24 hours ago, but they are pretty much all significantly up over 2, 3, 5 days ago. And that is what matters in the long term. We see here Bitcoin trading at almost $6,700, which of course is one of the key resistances. Ethereum is safely above 200 at $240, has gained beautifully the last couple days. Now XRP, of course, we saw shot up by almost 100% yesterday, has lost some of that, but is still up at 57, almost 58 cents. If you remember, just a couple days ago it was under 30 cents, so the price has still doubled in a couple days, even if it hasn't been able to hold on to the 78-cent peak it reached yesterday. And everything else is looking similarly well. Bitcoin Cash is at almost $500, and EOS is inching towards $6 again, after it was testing $5 for a while, and we see the same pretty much everywhere. I think it's way more important today to pay attention to the 7-day graphs than to the 24-hour difference, because we reached such a high peak yesterday that of course most coins will have lost a bit since then. But like I said, if you look at these, you see that 2, 3, 4, 5 days ago everything was way below the current values. The market cap right now is at 223 billion, of course reached 230 yesterday, up from just about 210 I believe a day or two ago. And Bitcoin dominance still going down, now at 51.7%. It is looking like sooner rather than later Bitcoin dominance might drop below 50% again. Now this is all looking very promising. To me it still looks like we might be seeing early signs of a new bull market here, but I am not a technical analyst and I am not an expert, so that is just based on the patterns I have seen in the past. Don't listen to me. But we have articles open and one of them is an analysis of the market, so let's look at what people much smarter than me have said. Now this of course is a couple hours old. When I'm making these videos in Germany, it is usually early morning in America, so most of the crypto websites have not posted articles on that day yet. I'm usually dealing with the last couple articles posted the day before. Anyway, let's look at this one from Cointelegraph. Cryptocurrency markets continue resurgence as Ripple claims 68% weekly gains. Bitcoin has rapidly corrected its monthly losses Friday, September 21st, after markets rallied to send prices above $6,700 for the first time in 2 weeks. Data from Cointelegraph's price tracker and Coin360 confirms a strong performance for Bitcoin, which had seen a week of flat trading closer to $6,200. Look at this beauty, and look at XRP here, up 41%. The move upwards, which occurred over several hours, came as news broke that US regulators had again postponed their decision on the VanEck SolidX Bitcoin Exchange Traded Fund, ETF, but had not rejected it outright. At press time, Bitcoin US dollar was trading around $6,707, an increase of about 5% on the day, taking prices back to the range they hovered in during mid-August. Mid-August, of course, before we saw a large crash, and I believe crypto market cap had reached 240 billion at that point, and we crashed back below 200 billion in just a couple days. In altcoin markets, Ethereum's reversal of fortunes continued after weeks of beating Bitcoin on losses. Prices at press time for Ethereum US dollar hit $225, and now of course significantly higher still. Also a first since September 7th, having fallen as low as $171 in the meantime. Ripple nonetheless stood out as the clear winner on Friday, continuing its surge of over 44% on the day to hit weekly gains of around 68%, currently trading around 46 cents. That is now about 58 cents. And if we take another quick look, I forgot to even mention it. Yesterday, we briefly saw XRP overtake Ethereum in market cap. Then Ethereum took back over. Then XRP once again briefly took over once more, and now it has fallen to third spot again. But if you look at the market cap, Ethereum at 24.5 billion, Ripple at 23 billion, those are very close. Those are only about 5% apart. Just a week ago, they were about 50% apart. So they have closed significantly. All it takes for XRP to become the #2 cryptocurrency is one good day for the token, or one bad day for Ethereum. That is all it takes for the rippling to happen. And we've seen it yesterday. That was a tease. Let's see if it will happen permanently. Prices seem to be consolidating and now aiming to go upwards again, at least for XRP. So let's see what will happen over the rest of the weekend. I'm very excited. Anyway, let's read the rest of this article. Commentators were initially unsure as to the motivations for such a rise, Ripple itself having hinted its XRapid payment transfer network would shortly begin serving its first banking clients. XRapid would offer international payment settlements using XRP directly as an intermediary currency. Elsewhere in altcoin markets, Stellar, Tezos and Cardano also produced healthy gains of between 15 and almost 18%. Total market cap is now around 217 billion by press time. So we see everything a bit higher than during that article, but compared to yesterday's peak, we are a bit down. But like I said, don't pay too much attention to 24-hour chart. Look at longer term, change, not charge. Look at longer term movements, look at the last week or so, and there you see beautiful, beautiful gains. Bitcoin is battling at the 6,700, and XRP seems to be testing whether it will go above 60 cents or fall below 50 cents, so there's a lot of potential movement there. We will see what happens in the coming hours and days. Next up, a prediction for Ethereum from Ethereum World News. Now, of course, this is a biased source. They obviously want Ethereum in particular to do very well, but I don't think we should discount their analysis based on that. Ethereum could bear down to $140 and turn into a bull run in a surprise market dynamic, by Nick James. Over the last 6 months or so, Ethereum has been on a bearish market, dropping from the peak of $800 to below $200 in a matter of months. This unfortunate turn of events has left many traders and analysts wondering where Ethereum's true bottom lies. However, the crypto has improved its stand over the last few days to attain a value lingering just under $230. Now it is actually at $240. Why the slump? First off, it's good to understand that in the crypto world, an influx of tokens released into the market might upset the market value of the particular cryptocurrency unfavorably. This of course doesn't only happen in crypto, this happens anywhere. This is why you see hyperinflation when a lot of money is printed sometimes. In the case of Ethereum, Ether, the price dip was largely as a result of big ICOs dumping their Ethereum holdings into the market to fund their business ventures. The most impacting event occurred in May when 100,000 Ether worth $60 million, each valued $600 at the time, were dumped into the market, causing a sharp 15% price dip within weeks. By August, Ether's value had thinned out to just $300, and another flood of 110,000 Ether in mid-August brought about another bearish sentiment that led to a further price dip. This should show you the power that individual payments, individual purchases, individual people can have on the markets right now. Especially ICOs. ICOs have hundreds of thousands of tokens. If they dump all of theirs at the same time, that can crash the prices by 50%. That actually happens. That can happen. So keep that in mind when you see price movements in crypto right now, because crypto is still a young market and a lot of tokens are more centralized than people would like to believe, with a few people holding a large part of the markets. That means individual people can manipulate the markets if they want to. I'm not saying these people were aiming to manipulate the markets. I think they needed their money in fiat because they needed to use it for other stuff. But if people want to, and if they have a lot of tokens, they can sell them all off, they can crash the markets, they can rebuy at a lower price. That is what we think happened a couple of weeks ago when the markets crashed again. The second reason for Ethereum's price rose stemmed from the network's troubles in controlling its ecology and tweaking up its upgrades to perfection. For instance, the network has been experiencing slow processing speeds for long hash data, causing a workload of unconfirmed transactions totaling 80,000. That's not a good thing for a cryptocurrency that sits at the top of the charts as the second largest and most popular in the market. And their outlook, what could happen, this is the interesting part. Besides these issues, Ether has faced stiff competitions from the likes of EOS that has 4 dApps as opposed to Ethereum that only has 2. Ether has experienced a few spikes and falls in the last few months, with each price spike followed by a sharp decline. That dynamic suggests that if the cryptocurrency can't establish a stable resistance level soon, things might not work out so well for its market value as it would keep going down. However, as much as there could be many market dynamics that could trigger a bearish move for Ethereum, it's estimated that the crypto's value wouldn't fall below $140 before it bumps out. I would like to see the source for this. That's because that's the value at which miners would break even, and anything below that price wouldn't be worth it. Now, we have seen something similar going on with Bitcoin, where the main reason quoted for why the bottom is around $6,000 is because that is the current break-even point for miners. Now, of course, it is always possible that a cryptocurrency will continue being active and continue moving without anyone producing new tokens. In fact, there are plenty cryptocurrencies that are completely pre-mined, where no new tokens are being produced. So I think in the long term, at some point, we will see a point where mining is not profitable anymore. I believe it is estimated that the last Bitcoin will cost billions to mine. Bitcoin will almost certainly not be worth billions. So at that point, mining will simply not be worth it and people will simply stop mining. At which point we will just be moving ahead with a fixed number of coins out there instead of an inflationary supply. Interestingly, if the value were to drop below $140 and make it unprofitable for miners, the mining would stop and the supply of Ether tokens would reduce. That would create more demand for Ethereum and ultimately cause a bullish run. I'm not sure it would necessarily cause a bullish run. It would be more. It would of course be less supply, and we know it's a supply-demand world. So if the demand goes up and the supply stays the same or goes down, that means prices go up. But saying it will cause a bullish run is speculation. And the last sentence is here. That means that even if Ether had to down, it wouldn't really die. This sentence doesn't make any sense. A bear market might as well be the invitation for a bull run. Now, I think theoretically that is possible. I think it is a good point to make that at $140, that is the break-even point. Anything lower than that is unlikely to happen right now. But in the future, we don't necessarily depend on miners to continue mining. The problem is some of these networks need miners to also deal with the transactions. That is a problem when no mining is happening. But we don't necessarily need miners in the long term. At some point, mining will not be profitable. And all of these tokens that are expensive to mine, Bitcoin, most importantly, people will simply stop mining them. The last one will likely never be mined. And we just need to get used to that idea. And proof of work mining is proof of work mining won't work forever. That is just how it works. That is just how the system is set up. The prices for mining will exponentially increase, and for a while the crypto prices will be able to keep up with that. But at some point mining will just be more expensive than the money you make from actually selling the crypto you have mined, and at that point people will simply stop mining. That's what's going to happen. That is one of the core reasons so many new cryptocurrencies are using a proof of stake system and not a proof of work system. They want to cut down on the electricity use, that of course being one of the core things that is making it so expensive. Anyway, I've been babbling on for a long time on this, of course, so let's continue on. Largest Brazilian brokerage to launch exchange for Bitcoin and Ethereum. This is always good news because this means more institutional investors flowing into the markets. Anytime a large brokerage like this gets into crypto, that is absolutely great news for us. Let's read this article. The largest brokerage in Brazil will enter the crypto space by launching an exchange for Bitcoin and Ethereum in the near future, Bloomberg reported on September 21st. Chief Executive Officer at Grupo XP, Guilherme Benchimol, I pronounced that completely wrong, told Bloomberg that the company will launch an exchange called XDEX in the coming months with around 40 employees. Grupo XP is the biggest financial group in Brazil, comprising companies with various business models. XP has reportedly set a goal to have 1 trillion reais, I think that is the way to pronounce their currency, which is roughly 245 billion US dollars, under custody by 2020, which is 4 times what the company expects to raise by the end of this year. In addition, XP will launch a bank in the next few months. He said that he must confess this is a theme I'd rather didn't exist, but it does, adding that we felt obligated to start advancing in this market. He noted that the company is being pushed into the crypto business by the popularity of cryptocurrencies among investors. 3 million Brazilians have exposure to Bitcoin, compared to only 600,000 that invest in the stock market. This is huge, and I think people aren't paying enough attention to this. This means that at this point, even financial corporations and banks that don't want to go into the crypto world are under such immense pressures to deal with crypto that they are doing it anyways. That is huge. That means crypto is unstoppable. I mean, not every country will have this situation yet, but I'm sure American and European banks are facing similar situations where a lot of investors with them want to invest in crypto, and these banks have a choice. They either don't offer crypto products, and then they risk people just buying crypto themselves and not putting money into their products, or they offer crypto products. And what does any smart bank or financial institute do? They offer crypto products. So this very good for mainstream acceptance will mean a lot of money flowing into it. Initially, Grupo XP announced its plans to launch an over-the-counter, over-encounter? I think that's supposed to be over-the-counter. Bitcoin exchange in April. The move was reportedly the first for XP, which first registered an outfit called XP Coin Intermediação, I'm sorry, I'm so bad with foreign languages, in August 2017. Later that year, following a 5 million reals, about $1.5 million capital injection, the company rebranded to become XDEX. Earlier this week, Brazil's Administrative Council for Economic Defense launched a probe into 6 major national banks regarding alleged monopolistic practices in the crypto space. Per their report, the main banks are imposing restrictions or even prohibiting access to the financial system by cryptocurrency brokerages. The banks reportedly claim that the brokers' accounts were closed due to an absence or lack of client data. So a lot of shady business going on there as well. Let's see what they will find out when they look into it a bit deeper. But in general, seeing such a large financial institute going into crypto is very, very good. And I always like to report on these stories on the channel. I think they're very positive, they're very uplifting, they show us a very beautiful image of the future. Next up, very good news out of America, nothing definitive, but this is a potential movement in the right direction. US lawmaker introduces 3 pro-cryptocurrency bills to Congress. Now, of course, a bill being introduced does not mean much, it still needs to be voted on. But this means that crypto is being actively discussed, and the more it is being discussed, the more lawmakers have to look into it, have to expose themselves to new concepts, and have to deal with crypto. So even if these all get turned down, that means all these people think about crypto more than they otherwise would have. On Friday, September, I'm so sorry, I'm even more messed up than usual today. On Friday, a US member of Congress announced that he will introduce 3 new bills aimed at supporting the development of blockchain technologies, as well as the use of cryptocurrency within the US. According to Representative Tom Emmer, a Republican from which state is this? I'm very bad with that. The initiator of this bold move, the US needs to pass favorable legislation to the burgeoning blockchain industry if it hopes to remain a leader in this space. And he said, the United States should prioritize accelerating the development of blockchain technology and create an environment that enables the American private sector to lead on innovation and further growth, which is why I am introducing these bills. Overall, the new legislation will support the rapidly growing blockchain industry within the US by providing clear and concise guidelines for investors, companies, and businesses, as well as a safe harbor for taxpayers using cryptocurrency assets. That is very important. The vast majority of people are not even disclosing their crypto earnings right now because they there's so much confusion around how to deal with the taxes, and people are scared, and this would be a step in the right direction. Representative Emma, who has just been named co-chair of the Congressional Blockchain Caucus, also added that legislators should be embracing emerging technologies and providing a clear regulatory system that allows them to flourish in the United States. His first piece of legislation is a House resolution to express support for cryptocurrency and blockchain technology. As mentioned, this and the other two bills are aimed at supporting the use and development of blockchain technology in the United States. According to Emma and many other industry experts, the US government cannot do anything to stop their development, therefore legislators should be stepping in to provide a clear, concise and legal framework for their use within the country. The second bill, the Blockchain Regulatory Certainty Act, confirms that certain entities such as cryptocurrency miners and multi-signature providers who never fully take control of consumer funds will not need to be registered as money transmitters. This is because they are only there to help validate the network's integrity by providing more security for those who use digital assets. The final bill, the Safe Harbor for Taxpayers with Forked Assets Act of 2018, aims to address confusion surrounding how to report gains made as a result of cryptocurrency forks to the Internal Revenue Service (IRS). Previously, there was little IRS guidance on this matter, so the bill will be used to give taxpayers tight regulation about the use of forked funds. Furthermore, it will also protect individuals from facing fines until the IRS establishes some guidelines on how taxpayers are to report their digital assets. So I think these are all very good. The first one is just a resolution to express support, so that is nothing concrete, but that will be good for anyone working in the business to know, okay, they are supporting us, we can move in this, and we don't have to fear that we will be that our work will be outlawed or overly regulated. Second bill, Regulatory Certainty Act, also very much a move in the right direction for miners, and the final bill, that is I think the most important one right now, because like I said, there's a lot of confusion, not just in the US, but just about anywhere, on how to report your cryptocurrency earnings, how they will be taxed, what you have to disclose, and forks are one of those issues that traditionally you had no equivalent for, so there's complete confusion as to how that has to be reported. You usually don't just get a bunch of money from nothing. You don't, if you hold $100, you don't just suddenly get 100 of a new currency when the dollar forks into two. So there was no precedent for this. They need regulation. Of course, I haven't read the text for these resolutions. I don't know the details, so take everything here with a grain of salt. But based on these short descriptions, they sound positive to me. And now, last but not least, Bancor announces expansion into I'm just so messed up today. Onto EOS. On Wednesday, Bancor announced it was porting its protocol onto the EOS network. In a post on Medium, the company wrote, having initially built Bancor on the Ethereum blockchain, Bancor is now evolving into a cross-chain liquidity protocol, starting with added support for EOS. Bancor offers immediate conversion between tokens. With the expansion onto the EOS blockchain, the company says these conversions will now be possible across the two networks. Though Bancor was initially created on Ethereum, the expansion onto EOS is not surprising, and its involvement in EOS is not new. The company acts as a block producer on the network under the name Liquid EOS. Liquid EOS separately announced the development, writing, bringing liquidity to the Ethereum blockchain has proved a great success, and we are excited to replicate on EOS, not iOS, oh my god. Bancor's announcement also listed 10 EOS-based tokens that will go live on its new liquidity network titled Bancor X, which is currently on the EOS testnet. Now this is very good news of course for EOS, and it shows more support from inside the cryptocurrency world. There is so much development happening both on top of Ethereum and on top of EOS, but EOS is really emerging as a new major player in the last couple months, with more and more development happening on it, and that is very good to see. I think EOS has a lot of potential in the future. If you have watched it on my channel, if you've subscribed to me, you've probably seen it. I made a video a while ago giving some price predictions for EOS as well, called Can EOS Make You a Millionaire? I think there's a lot of upward potential there, and this is very good to hear. Anyways, I'm gonna end the video here. As always, thanks for watching. I hope you have a fantastic weekend. All these articles are linked in the description, as well as my social media links and ways to support the channel, and make sure to subscribe. I will talk to you guys soon. Bye.